Hello, everyone, and welcome to another episode of MasterMind Minutes. My name's Gary Occhiogrosso. I am the managing partner of Franchise Growth Solutions. As you know, that's this big sign in back of me that I use at trade shows. You can learn more about Franchise Growth Solutions by clicking on the link above or below this webcast or podcast, depending on the platform that you're watching. I'm also the publisher of FranchiseMoneymaker.com, which is an online magazine designed to educate franchisors and franchisees on the ins and outs of franchising. And that is pretty much how we would describe MasterMind Minutes, other than for those of you who are watching us the first time. MasterMind Minutes is a very simple format. It's one guest, one question, one answer. We do it in minutes, not hours, and we stay pretty true to that. We do recognize that that's a bit of a tease at times. So at the end of the program, we will give all the contact information for our guest, and you can contact our guest directly if you want to know more about what they do, more about their company and the services they provide. Today, my guest is Reg Byrd. He is the managing partner of DCV Franchise Group. And for over 25 years, Reg has been a business venture strategist. He's assisted entrepreneurs in all aspects of business development with a focus on financing, which we'll be talking about today, business plan development, financial projections, and blueprints for really what we all look for, aggressive return on investments. Now, the scope of his work has ranged from sole proprietorship businesses to capital-intensive Fortune 500 hotel development projects, which are, it's big business. He'll tell us about it in a bit. And within the franchise community, Reg is known as the master when it comes to SBA financing. And I can vouch for that because a lot of my clients we send over to DCV and to Reg and to Anthony to help us out with financing for franchisees. Well, for the last decade, Reg's business has organically evolved to include all franchise systems, not just the hotel business. And to date, DCV Venture Group has served more than 300 franchise systems, placing debt for franchisees in the U.S., Puerto Rico, Panama, and Canada. And Reg, thank you so much for being with us today. I know it's earlier there than it is here. You're out in California. Before we get to the one question, please tell us a little bit more about DCV and tell us about yourself and what you've been doing.
Thank you, Gary. Thank you very much for the opportunity to be here this morning. At least it is my time. I've had only one cup of coffee so far, so bear with me. But I'm here in beautiful Southern California, and things are great. But DCV Franchise Group started actually where I'm sitting today for obvious reasons. I never thought I'd be back in the office here at home, and neither did my wife for that matter. But so far, so good. We're 4 months working from home. And fortunately, it's worked out really well. It was about, I'll step back just a little bit. As I said, I started the company here in my home office. As Gary mentioned, I was originally working with hotel owners around the country, brokering hotels, acquisitions and dispositions. And then we evolved into working with all kinds of different franchise organizations. And that's because simply of trade shows and conferences, which so far we've really missed going to because of COVID. It's a business where there's a lot of touchy-feely going on. We need each other in space where we're seeing each other face to face. So I've really missed that. And that was really the basis of how this company became what it is, just through relationships, because we've never marketed or advertised to any great extent whatsoever. But just a little recap update, I guess you could say, Gary. We've actually worked with over 550 different franchise concepts now, so we've really bumped that up. Amazing. We've placed over $2 billion in project financing in this time. And when I say those numbers and think about those figures, it's really humbling. It's something that is it's almost hard to believe that those words are coming out of my mouth. I mean, when I started the company, I had just left the hotel business where I was CFO controller for many years, and starting my own company, I had a mortgage to pay. And so this is what I wanted to do, and I found a way to do it, and fortunately it worked, and I paid my mortgage, and then one thing just led to another. But I think that a lot of what we do or how we do it is the reason for where we are today. And I was talking to a couple of my staff earlier this morning, and we really stress how much empathy we have for people who are going through this journey of achieving financing and buying a business, in most cases for the first time in their life. And so we're very sensitive to that. And that's kind of how our process works with all of our team members.
Well, I'll tell you, I will vouch for that personally and professionally, because anytime I've ever dealt with anyone in your organization, the response time is outrageously quick. The level of detail and depth of information that I get back is great, because very often if I'm dealing with a potential franchisee, you know, they're not going to be in a position to sign their franchise agreement until they know they can get financing and fund it. And quite honestly, I don't want my clients signing someone up who can't afford to build a unit. So it's a critical piece in the franchise awarding process. And I deal with a lot of companies that do financing. I deal with some of the banks directly, and I can tell you that
how many companies are you dealing with that do financing, Gary? I thought it was just us.
Well, no, you're my prime. You're my prime. But what we do is we try to recommend two sources to every potential franchisee, so that we don't seem like we're leading or steering anyone. And then of course there's the banks. Sometimes they go directly to their bank, and the bankers are probably the most difficult to deal with, because in most cases they don't even understand franchising. This is what I love about you guys. You guys understand it. You know what it means to be on the SBA registry. You know what an FDD is. Very often when people go to get financing, the banker, they'll bring the FDD, and I think when the client leaves, the banker throws it in the garbage because they don't want to read it. I don't know. I mean, I'm being facetious, but that's the feeling I get. So I can't say enough about DCV and what you guys do. So let's get to the question, because it's all about the money and funding the business when you're looking to go into business, whether it's a franchise or not, or whether you're looking to grow and expand your business. So we're kind of in a funky, unknown, environmental climate. Some people are doing great. I've got clients that are doing great. The stock market seems to be doing well. There are other industries that are just kind of in the off position. So the climate right now is, it's very unknown. I don't believe, by the way, it's a new norm. I say this on almost every show, because I believe every day is new. So anything that happens is always temporary. But in the current environment, what do you see that banks are looking for in a candidate when they're lending money? And what are the things that they're lending on, and maybe what are the things they're shying away from? I know there's like 2 or 3 kind of hidden questions in there, but you got the floor.
Thanks, Gary. Appreciate that. And touching just a little bit on what you said about this not necessarily being the new norm, having some clients who are doing well and others who might not be doing so well. I mean, all we have to do is drive down Main Street, and we see one's open, one's not. And that really speaks a lot to or speaks back to what lenders are looking for, is why did that one close and that one's still open? And what banks have fixated on, that we're seeing every single day with every lender, is what kind of industry experience does the individual have who's applying for the loan? Now, of course, we always lean on what the franchisor is doing for the franchisee in training and so forth. And quite frankly, over the years, we'll get people who call us and they'll say, my bank turned me down because I don't have direct industry experience. Or they'll even go to the extent of saying, I don't think I'm going to be qualified because I don't have industry experience. And our response has always been, that's way overrated. And it's overrated for the following reasons. That which the franchisor does in training, hiring an experienced manager. So there's ways to wiggle through that. There's a way to navigate through it. And now, though, this is something that banks are really leaning on, because their thought is that the businesses that are open are the ones that have had experienced owners that have known how to manage their cash flow, how to manage their inventory. They know what staff to keep and what staff to let go of. So they're really paying close attention to that. I'd say that that's one of the biggest shifts in what we've seen with bankers, no matter what we tell them.
So in addition to things like having good credit and being able, if necessary, collateralize the loan, the banks are looking at the past experience of the individuals. And I had heard this. I heard a lot of this back in 08 and 09, and
Right.
You know, on the franchise side, as a franchisor and as a developer, you know, to me, when I first heard it, it was almost counterintuitive to franchising in general, because people who don't have experience, that's part of the reason why they gravitate to a franchise. But I can understand, based on what you just said, that and what you just mentioned about managing cash flow, knowing what employees to keep, not to keep, that really is not necessarily franchise centric. That's business centric.
Exactly.
So I
and
can
especially
understand.
oh, sorry to interrupt.
No, please go ahead.
I'm just so excited about talking about this, to get it out there, to make sure people know. But, you know, before I forget to mention it, I do want to say that there are still ways to navigate through that if you don't have direct industry experience. So I'll just say this and move on, that we're still qualifying individuals who do not have direct industry experience, because we see within their professional organization who they've surrounded themselves with, what their intentions are, knowing certain franchisors and how much emphasis they place on training, we can get through that. So I don't want anybody to back away or be afraid or not move forward just because they don't have direct industry experience. We can figure out oftentimes how to work around that.
Right, and I think that's an important point. And again, just to kind of get back to DCV, and one of the reasons why I enjoy working with you guys so much is very often, you know, we might have a candidate that tells us about industry experience, or, you know, we're just not sure. You know, we have submitted their paperwork to your organization to kind of get a feel for whether or not that individual is bankable, for the lack of a better term, and we've gotten that input back from you, and that helps us do deals. Right. So it seems that, look, you know, again, short of somebody, you know, maybe being a felon or having a 500, you know, credit score,
right,
you know, you can find a way. So then, you know, so banks are now looking for management experience. Got it. Credit scores, I mean, they're still important, right?
Of course, yeah, absolutely. You know, and with credit, Gary, we have always said, just let us review your credit. If you think that your credit scores are too low, again, don't be afraid. Let's look at the credit as a whole, not just the scores. What's causing the credit scores to be low? I had someone just the other day who had been looking for a car. Car dealerships will just trash your credit. I mean, this poor woman had something like 11 or 12 inquiries on her bureau, and it just trashed her credit. And so it's important that we, as experts in the industry, have the opportunity to review the entire credit composition and see what it is. And then if the credit is not what we think it needs to be, and we don't see how it can be explained or how we can get through that with a bank, then we have a company that we've been using for over a decade now, who can help individuals with their credit and get them back on track.
Yep, I have a client right now working with one of your folks who's going through that at this point. So yeah, that's good. So the other thing that, you know, again, in terms of what banks look for, that has always been very curious to me, and I guess it has to do with SBA and regulations. But, you know, I've heard, and I've never been able to take a loan out, by the way, without some level of collateral, and it's usually real estate. But I've heard, and again, not being a banking expert and a financing expert, I've heard things like, well, the SBA doesn't really require collateral, but if you have it, then they want to know about it, and they want to be able to, I guess, attach it would be the word. Kind of walk us through that. It just seems a little bit sketchy unless my information is just totally off base, and it could be.
No, you're really close. You're really close. And,
All right.
yeah, the SBA guidelines for a bank in the rule book, the playbook that banks have to abide by. The SBA says something like, "Hey, bank, you need to go look for collateral, and if there is any, then you need to put a lien on it." A lien, generally, the collateral is found in equity and personal real estate.
Right. Mm-hmm.
So the bank is required to put a lien on that property. Even if there isn't any collateral or equity, I should say, even if there isn't any equity right now in the home, the bank still will probably put a lien on the house with the expectation over the term of a 10-year loan, the house will eventually start appreciating in value, and the bank/SBA will have something to fall back on. Now, a renter might ask, well, I don't have any collateral at all, even when the bank goes to look for it. Well, that goes back to the rule, which is, hey, bank, look for it. If it's there, you have to put a lien on it. But this is the other part I didn't say, which is, if there isn't any collateral, then bank, you need to look at the entire financial composition of the prospect borrower. How much cash do they have on hand? How much experience do they have? What does their credit look like? And so on and so forth. What kind of secondary income is there? So we mustn't just lean on, pardon the pun, lean on the fact that there has to be collateral. I never want people to be afraid of that being the cause of them not coming to us or exploring the American dream further.
Right. And that makes perfectly good sense to me. Okay, last piece of this one question that I'll ask. Obviously, the franchise that the individual is looking to invest in has to come into play. Does, DCV, the bank, what is their approach with respect to, let's say, the closing ratio for the franchisor? How long has the franchisor been in business? How many units do they have? How many maybe bad loans were given out and franchisees fell? How does that come into play?
It comes into play for some banks more than other banks. Mm-hmm. Every bank has its own personality. They all have their own chairman of the board. Some banks won't touch doing financing for a franchise system that has less than 150 units. Mm-hmm. Some won't touch it if they have less than 30 units. And then there are others who understand what an emerging concept is. So here again, this is another reason why it's so important for folks to allow us to navigate through that. Don't go to your bank and have them tell you that you can't get a loan and be discouraged, because that's not the end all. And it's kind of like you said earlier, and I wrote it down so I don't forget, because I want to go back to something you said, Gary, about when people walk into the bank, they don't know about franchising. And that is so often the case. And they take the FDD and they're like, what the heck is this? Well, by the time a file gets to underwriting, I can pretty much tell you that an underwriter is going to know what an FDD is and is going to need it. But that front line at the bank is what I call the cheerleading effect. Yeah, rah, yeah, we can do this for you, no problem. And then the next thing you know, they pull the rug out from you at the 11th hour. Now, I'm not saying that happens in all cases, but it's just that we've heard this scenario so many times. Yep. So a bank will definitely look at the FDD. There's no question. Somebody somewhere down the line at the bank will look at the FDD. And it's kind of funny because this was probably, I don't know, everything seems like a decade ago anymore. But, especially turning 60 this year, it's like a couple decades ago, I guess. But the FDD, there was a time when bankers were not that savvy about item 19. And it was really funny. One day I had a banker call me, and I still talk to that guy today. He's a sweetheart. But he called me and he goes, Reg, our bank and I just found out about item 19 and how we can use that to our benefit in our underwriting process. And I'm like, oh, shoot, I wish they'd have kept not knowing about it. But it's funny because there was a time when the banks just didn't know about item 19. Yeah. And I think that with just a tremendous amount of press about item 19 within our franchise community alone.
Mm-hmm.
Bankers attending conferences and so forth. All of a sudden, item 19 was a really, really big deal. Should we disclose? Should we not disclose? Was a big topic several years back.
Yeah.
And so a bank will look at the FDD. They'll look at the failure rate. They'll look at of the chart in the FDD that shows how many franchises currently exist, how many do you plan on opening this year, how many were lost, and then what the net of all of that is. So banks will definitely look at that as well. But that said, we also look at that. As we tell our clients, we're on their bench. We want to figure out how to get a deal done. That's how we make money. That's our model. That's our business. So it's to our advantage to pre-qualify somebody and take their engagement fee. Yeah. However, we're not going to offer a pre-qualification to somebody if we have, for example, vetted the franchise and we know there isn't a bank out there that's going to take this deal because of what's gone on with the franchise system.
Mm-hmm. Mm-hmm.
Now, there are some franchisors who've called me over the years and said, hey, I know we just came out of bankruptcy, but can you still help us place financing for our franchisees? And of course, the natural response that I want to put out there is no, but that's not the response. The response is, let's take some time and understand what you're doing within your organization now to come out of chapter 11 or whatever it is that you've been in. And it's the same thing with our clients, with our prospects. When we talk to them, if they've had a bankruptcy 5 years ago, how are you doing now? What have you done since bankruptcy to get yourself back on track? So we look at that the same way with franchisors. There's one franchisor I spent an entire day with at their office, an entire day, just going through questioning. I had a 101-point checklist of things that I needed to go over. I didn't go over all of them, but this meeting was great because it ended up that the guy brought in their director of this, their director of that. I even met the executive chef and all of these kinds of things. So I walked away telling the guy, we'll do financing for your franchisees. I have enough information now to know how you've restructured, who's gone, who's here now, and how things have changed.
Yep. Well,
so that's that kind of information we take in and absorb because ultimately we're the ones who have to place the financing with the bank. And so we're going to need to explain that to the bank. And help
Absolutely. You don't want to spin your wheels. All right. And what I often say at some of the seminars I conduct, and certainly with either franchise candidates and even franchisors at times who are looking for money, I always tell them, listen, there's hundreds and hundreds and hundreds of banks and ways to fund the growth of your company. Never allow your dream to die in the parking lot of the bank. Just keep going. We're kind of out of time. Give me kind of a last thought here and tell the folks who are watching how they can get in touch with you.
Well, the last thought is really kind of a goosebump thing for me. I'm a big corny guy, but I just have such a passion for what we do. And what you said about don't let the parking lot be the place where you let your dreams die. That should never happen. To reach us, our phone number is 805-449-2411, 805-449-2411, and that's at on Pacific time. My email address is rbyrd@dcvfranchisegroup.com.
Great. And I could also tell you, if you Google DCV Franchise Group, it'll come up. Make it real easy. Well, Reg Byrd, managing partner of DCV Franchise Group, thank you so much for being with us today. I can't thank you enough, not only for doing this, but also all the other things that we've got going on with your company. So have a great day, and we'll look forward to speaking with you again soon.
Likewise. Thank you, Gary, very much.
Have a good one. Bye.
You too. Bye now.